What's up, deal makers? Welcome to the Deal Maker channel. And in this video, we're going to talk about McDonald's. We're going to look at their business. We're going to look at their financials, look at their numbers, and see if McDonald's is worth buying or adding to your portfolio. I actually had difficulty while doing this video because a lot of the things that I look for in stocks that I like are not there. There are a lot of red flags with McDonald's, and we're going to talk about those red flags, those warning signs. And I had to dig deep for a reason to buy McDonald's because, to be honest, I was of a different opinion from Wall Street. Wall Street was very bullish, or is very bullish, on McDonald's, but I wasn't. So I had to look deep into why that was so. I learned a lot from McDonald's. I'm glad I actually did this analysis, and I'm going to share everything that I've learned in this video. So let's dive in. So the big question is, should you buy McDonald's stock right now? Is it a good buy now? And to answer that, of course, I always start off with looking at the business model. Now, McDonald's is an established company. It's a popular brand, and a lot of people already know the business model of McDonald's. They have company-owned restaurants, but a bigger majority of the restaurants are actually franchised restaurants. So McDonald's is in the franchising business, and 7% of their restaurants are company owned, while 93% is franchise owned. So this was not the case a few years ago. A few years ago, it was at around 83% franchise owned. Then they had a shift. So they shifted towards more franchise owned restaurants. And that shift actually caused one of the red flags that I saw now, dropping revenues. So initially, when I looked at the revenue numbers for McDonald's, I was alarmed because revenue was dropping. But I realized that this was mainly driven by that shift to more franchise restaurants. Of course, McDonald's corporate does not record the sales of their franchise restaurants. They only record the royalties that they get from the franchise restaurants. So as they shifted from a higher percentage of as they shifted to a higher percentage of franchise restaurants, then obviously this revenue number will go down. So, admittedly, this was one of the things that surprised me at first, but eventually I saw that this was perfectly acceptable. But the next red flag is the increase in debt. So this one is is a bigger question mark for me. So debt has been rising for McDonald's ever since 2015 to 2020, and there's no sign that it's slowing down or that it's even turning around. So that is actually a big concern for me, if I may say so, because I don't want a company that has increasing debt. I would rather have a company that has I would rather have a company that is decreasing their debt load. But right now, looking at the numbers for McDonald's, their current assets are bigger than the current liabilities. There's no big concern about their short-term debt. It's more of the long-term debt that's a big concern because that increasing debt actually created a shareholder deficit. So a shareholder deficit happens when your liabilities are much bigger than your assets and you get a negative in shareholder equity. Well, let's look at this chart. So in 2015, shareholder equity was still positive. It was close to 7.5 billion, but starting 2016, it became a negative. And one of the big contributors to this continued increase in shareholder deficit is, of course, the increasing debt. So I'd really love for McDonald's to get a handle on that and get this back positive again. And there's already an encouraging sign because even though we had a pandemic last year, McDonald's actually improved their shareholder deficit position in 2020. So this was made possible because they sold a portion of McDonald's Japan. So from 49%, I think they lessened they sold around 17%, if I'm not mistaken. So bringing down their share to around 30% in McDonald's Japan. Okay. So that is the positive sign. So there were some red flags, but I guess there's already a reversal in the shareholder deficit trend. I hope that continues because I'd really love that to be at that positive number in the future. Next is the increase in operating income and earnings even before the pandemic. So as McDonald's shifted as McDonald's implemented their velocity growth plan. So this is their initiative to have a higher percentage of all McDonald's restaurants to be franchise owned. As they put that into action, operating income now went up. So even though annual revenue was going down, operating income was going up for McDonald's, which is a great sign. There was a there was a brief drop in here, probably because of the scandal with the previous CEO of McDonald's. He was involved in a sexual harassment case, but when he was replaced, the trend went back up. But of course, we had the pandemic, and this went down. But it was not as well. The drop, I would say, was not as big as we'd hope, because McDonald's also had initiatives to improve their digital channels, their delivery channels as well, and that saved McDonald's during the pandemic. And as we can see here, the trend pre-pandemic was the net income was already going up. So that's a great sign. And I hope that 2021, as the recoveries, as the vaccinations come into play, we will have strong numbers for 2021. So there are a lot of good signs to look forward to for McDonald's. There's also system-wide sales improvement during the pandemic. The COVID sales recovery is underway. The global decline in sales improved. In Q3, it was a negative 2.2% decline. In Q4, now it's just a negative 1.3% decline. And this was driven by strong growth in the US at 5.5% increase, up from 4.6% in Q3. International is still in the negative. There are two numbers here because there are two segments that McDonald's reports. So there's the international operated segment that is being handled by McDonald's corporate, and there's the uh, segment handled by affiliates or by master franchisees. So Q3, the number was negative 10.1 and for negative 4.4%, but in Q4, it improved to negative 7.4 and negative 3.6%. So I hope that this number continues to improve. System-wide sales increased by 1%, up from 0% in Q3. So all the positive signs are there for a recovery. And even though revenues drop, operating income, net earnings drop, there, McDonald's remained committed to increasing their dividend. So 2020 saw this tradition of a continued increase in the dividends. So McDonald's really is fit for someone who is looking to have cash flow from their portfolio. Because McDonald's is a member of the S&P 500 Dividend Aristocrats Index. This is an elite group of S&P 500 members that gives out dividends. And to become a member of this group, you need to be increasing your dividends. So you not only have to be consistently giving dividends for the past 25 years, you should have been increasing your dividends for more than 25 years. Uh, that's how you become a dividend aristocrat. And McDonald's is a member of that. So if you're looking for passive income, regular passive income from your portfolio, then McDonald's is a definite addition to your portfolio. If you like that information, please make sure to smash the like button for the YouTube algorithm. That helps YouTube distribute these videos to more people, and it helps the channel to grow, helping me make more of these analysis videos. So I still look for growth drivers, even though McDonald's is a huge company. It already has 38,000 stores all over the world. I would still like to see more store openings, and McDonald's is committed to opening more stores, especially as the worldwide recovery continues. So total restaurants have been increasing by 1 to 2%. every year. And you can see here this darker shade in the graph represents company-owned restaurants. And McDonald's has had that conscious effort. So they made a conscious effort to close down a lot of their company-owned restaurants or shift the ownership to franchisee-owned restaurants. And that's why by 2020, we're already at 93%. And the target there is to get that to 95%. They also, so that is the velocity growth plan in action. They've also improved the customer experience. Uh, McDonald's recognizes that really is the experience of going to McDonald's that will drive their growth in the future. So they have the initiative called Experience of the Future, where they want to modernize their store operations. Wanted to invest more. They wanted to invest more on their digital channels and on McDonald's delivery. And these investments in Experience of the Future actually helped McDonald's stay afloat during the pandemic. So part of that initiative is to put up these order kiosks. So to lessen the lines, improve the experience and have less lines on the counter. They also entered into partnerships with DoorDash and Uber Eats to improve the delivery experience. So they already outsource the delivery to these specialist companies. And they've continued to invest in having their mobile app to have the delivery experience also integrated into the McDonald's mobile app. And as more people use their apps more than their desktops, this is a big investment for McDonald's. But McDonald's faces a lot of risks as well. The biggest risk here is their interest rates. Uh, Good news is the Fed has committed to keep interest rates at the same level until employment numbers are at a more manageable level. So we need to be watching employment, we need to be watching the Fed on their position on interest rates. Because if you remember, McDonald's had a big run up in their debt levels. So uh, while that debt, while the debt level is still big, or while that is increasing, then McDonald's opens up itself to interest rate risk. So I'd really like to see that go down. Plus, McDonald's also runs the risk of a change in consumer taste. And as there is a trend of healthier eating, so we know that McDonald's is not exactly the healthiest of food choices. There is that risk that if McDonald's does not get into this trend, into this bandwagon, then system-wide sales will drop. But the good news is McDonald's is already experimenting on that end. They are testing out the McPlant burger in specific locations. So this is not yet system-wide. They're working with Beyond Meat for the McPlant burger. And I hope that this is something that catches on with the public so that McDonald's will stay ahead, or at least participate in this trend towards healthier eating. And the last risk that McDonald's faces right now is their tension with their franchisees. And there was this news report that came out recently that 95% of McDonald's franchisees are protesting because McDonald's corporate is passing on a lot of their costs to the franchisees, which the franchisees feel that has to be borne by corporate office. And one of these is the cost of employee training. So employee training in McDonald's corporate, and I think the franchisees are just right to have that, to protest that move. Now, there are also a few other things that they want to discuss. The good news here is both sides are talking, so that is something that is a positive. But if you're going to buy McDonald's stock, you want to follow this news to make sure that this ends in a positive note for McDonald's Corporation. Okay? So should you buy McDonald's stock? Well, let's look at my Etoro platform to see what Wall Street has to say about that. All right, so we're here on my Etoro platform. We can see here McDonald's is already at 214, but Wall Street analysts give it a strong buy rating. So McDonald's is covered by 19 analysts, and 79% of them give a buy rating, and 21% give a hold rating. The average target price is $240, so there is a 12% upside. The most bullish case is $266, so that represents a higher upside. These are the latest analyst rankings. So from Citigroup, Morgan Stanley, and Wells Fargo, they all give a buy rating with higher target prices. So there's still upside for McDonald's, or at least that's what Wall Street sees. The good news here is also hedge funds are buying into McDonald's. So there is a huge increase by the hedge funds, driven mainly by Ken Fisher of Fisher Asset Management. They increased or they added to their position by 6,000%. So Ken is really bullish when it comes to McDonald's, adding $119 million for Fisher Asset Management. Ray Dalio opened a new position, putting in $77 million in McDonald's. All right. Now there is some bad news here because insiders have been selling the McDonald's stock, and that's actually a red flag when insiders are selling. So as we can see here, these are informative sells. So people are selling DiBiase Francesca sold $4 million. Erlinger Joseph sold 1.5 million. Ian Frederick sold 895. This is the international president of McDonald's USA. So whenever insiders are selling, that's usually not a good sign. But I think that's balanced by uh, hedge funds buying in and Wall Street analysts painting a positive picture of McDonald's. All right. So again, if you want to get free money, open an eToro account using my link below to get $50, a $50 bonus when you open an account and when you start trading in eToro. And I only have 6 slots. That's limited to only 10 per person. That's eToro's Refer a Friend program. 4 people have already availed of that bonus money. So should you buy? Well, yes, if you want dividend income. Right now, I'm not looking for dividend income, but as I move closer towards retirement, then definitely McDonald's is on the back of my mind. I would like to see them have a better handle on their debt. I wouldn't want to have that those negative shareholder deficit when I am deep into my retirement already. All right, up next, I'll be doing another analysis on GM, Roku, and Carvana. I hope you stay tuned for that. Please make sure to smash the like button if you like what you heard in this analysis. Make that like button turn blue. That helps the algorithm send this to more people, and it helps the channel grow, helping me make more videos like this. And I hope you'll consider become a Patreon supporter once that is live. Make sure to subscribe if you want more stock analysis videos in the future. Hit that notification bell button to be notified whenever I have new videos like this. And I would suggest that if you want more stock analysis videos, if you want more options for stocks to add to your portfolio, you should watch my latest stock analysis videos in the Global Stock Analysis playlist. So with that, I hope you learned something from this video. I hope this helps you build your portfolio better. I hope it gives you more ideas, and I hope to see you in future videos. And I wish that all of your deals will push through. See you in the next video.